All right, so Atlassian just laid off 1,600 people, a massive 10% of their workforce. But here's the kicker. They're calling it a strategic pivot to self-fund further investment in AI. Basically, they fired a bunch of engineers to hire AI talent.
Yeah, and get this, over 900 of those cuts were in software research and development. Their core technical talent just gone. It's a brutal trade-off they're making, essentially sacrificing institutional knowledge for what they perceive as future AI capabilities.
900 R&D folks? That's a lot of people who built the very products they're now trying to AIify. It just feels so counterintuitive, doesn't it? Like, who's going to build this AI into the existing products if the people who know those products best are gone?
That's the million-dollar question, or in Atlassian's case, the quarter-billion-dollar question, because that's roughly what these restructuring charges are costing them up front.
Let's dig into those numbers a bit because they're pretty eye-watering. 1,600 roles, 10% of global staff. But the financial documents outline expected restructuring charges between $225 million and $236 million. That's a huge hit to take right out of the gate, even if it's a one-time cost.
It is, but they're playing the long game here, or at least they hope they are. Analysts at Wolf Research actually estimate these layoffs could generate about $390 million in run rate operating expenses annually. So on paper, they spend $200+ million now to save almost double that every year going forward. It's a calculated, if incredibly painful, financial move aimed at GAAP profitability by 2027.
So it's a massive upfront investment in not having people. That's a wild way to think about it. And you mentioned the R&D cuts. Over 900 of the affected positions were in software R&D. Given that over half of Atlassian's employees were engineers or designers, that's a significant portion of their builders.
Absolutely. It's not just a general headcount reduction. It's a very targeted surgical strike on their core product development teams. And the human element here, it's rough. Employees were notified by email within 20 minutes of the CEO's company-wide announcement.
Via email? That's just cold. We've all seen enough production incidents to know that immediate, clear communication is critical. And email for something this sensitive feels like a real miss.
A massive miss. One laid-off employee with 7 years of service just posted "laid off over email" on Reddit, expressing total heartbreak. It really flies in the face of the teamwork, trust, transparency values that companies like Atlassian often espouse. Though, to their credit, they did offer a relatively generous severance package, including 16 weeks pay minimum and an additional week per year of service.
Okay, so they're not completely abandoning people, which is good. But the method of delivery, especially for a company focused on teamwork tools, is a pretty stark contradiction. The CEO, Mike Cannon-Brookes, tried to frame it as not AI replaces people, but then immediately followed up with, it would be disingenuous to pretend AI doesn't change the mix of skills we need or the number of roles required in certain areas. It does.
That's the tightrope walk, isn't it? He's trying to soften the blow, but also signaling a fundamental shift. The union representing Atlassian workers in Australia called it a devastating blow and criticized the lack of consultation. They'd actually seen an influx of Atlassian workers joining in the weeks prior, specifically worried about AI impacting their jobs. It seems like the writing was on the wall for some.
So it wasn't a total surprise to everyone, but the scale and speed definitely were. It really feels like they're making a huge bet on a new skill set, even if it means losing a lot of valuable experience in the process.
And it's not just the rank-and-file engineers. The leadership structure got a significant shakeup, too. Vajiv Rajan, their chief technology officer, stepped down. He was a Seattle-based exec, had been with Atlassian for almost 4 years, after a long career at Microsoft and Meta. He was instrumental in building out their R&D organization.
Wow, the CTO. That's a pretty big deal. So they brought in a new CTO then?
Not exactly. They actually split his role. Instead of one CTO, they now have two. Tarun Mandana, who was head of engineering for AI, is now CTO for teamwork. And Vikram Rao, who was already their chief trust officer, is now CTO for enterprise and chief trust officer.
Oh, so they didn't just replace him, they completely re-architected the leadership at that level. And the fact that they're both coming in with those specific titles, one with AI baked into his previous role and the other with enterprise and trust, which are huge for AI adoption, that's a very intentional signal.
It's extremely intentional. Atlassian's communication around these promotions was very deliberate. They explicitly described Mandana and Rao as next-generation AI talent. That's not standard corporate speak. That's a carefully crafted narrative to tell everyone, employees, competitors, investors, that their technology leadership is now unequivocally AI native.
AI native, I like that. It's like they're saying the old guard understood tech, the new guard is AI. It's a pretty stark declaration that the definition of world-class R&D has fundamentally changed for them. It's almost like they're trying to force the culture from the top down by putting specific AI-focused leaders in place.
Exactly. They're not just reorganizing. They're trying to shift the entire company's DNA by embedding AI expertise at the highest levels. It's a high-stakes move, especially when you consider the institutional knowledge that walks out the door with someone like Rajan, who was there for nearly 4 years building up that R&D org.
It's like they're burning the ships behind them, saying there's no going back, we're all in on AI. So we've talked about the layoffs and the leadership shuffle, but the elephant in the room is this whole AI washing debate. Is this truly about AI, or is it a convenient excuse for some deeper financial problems?
Well, it certainly didn't happen in a vacuum. Atlassian has been facing some pretty intense financial headwinds. They haven't been profitable for years. In the last quarter of 2025, they recorded a net loss of $42.6 million. While they have strong revenue growth, getting to sustained GAAP profitability has been a challenge.
A $42 million loss? That's not insignificant. And then there's the stock market reaction, right?
Oh, the market's been brutal. In the first few months of 2026, Atlassian lost more than half its market value. Their share price dropped from around $300 in early 2025 to just $80 by March 2026. This massive plunge was driven by investor fears that generative AI could just make Jira and Confluence obsolete.
Wow, that's a pretty existential threat right there. Half their market value gone. So it sounds like there's a genuine business problem that needs solving, and AI is the proposed solution. But then how did the market react to the layoff announcement?
Ironically, the day of the layoff announcement, investors reacted positively. The stock went up nearly 4% in extended trading.
So Wall Street loves the tough decisions, especially when they're framed with AI. It's like they're saying, finally, someone's doing something drastic.
Exactly. It suggests that Wall Street saw this as a necessary, even if painful, step to correct course and align with the new AI paradigm. And Atlassian isn't alone in this. The term AI washing has really taken off to describe companies using AI as a convenient, forward-looking justification for what might just be more traditional business decisions.
So it's like synergy or blockchain all over again, a buzzword that can explain away almost anything.
Pretty much. Block, which owns Afterpay, cut 40% of its workforce, with Jack Dorsey explicitly linking it to AI productivity gains. Amazon has done similar things. One report even cited AI as a reason for over 54,000 layoffs in the U.S. in 2025. Scott Dillon, a tech fund founder, defines AI washing as attributing job cuts to AI when the real drivers are more mundane. Overhiring during the pandemic, margin pressure, slowing demand, plain old corporate restructuring.
So AI becomes the perfect scapegoat. It lets companies frame unpopular decisions in the language of progress, as you said earlier. Even Sam Altman of OpenAI has acknowledged it, saying there's some AI washing where people are blaming AI for layoffs that they would otherwise do.
That's a pretty damning statement coming from the head of OpenAI, isn't it? It suggests a tacit understanding that companies are leveraging the AI narrative. And internally, there was skepticism too. One laid-off Atlassian employee anonymously suggested the company had just overhired during the boom, and the CEO was hoping the stock price goes up as a result.
So for some, this isn't a grand AI vision, it's just a headcount correction dressed up in a shiny new marketing message. It's definitely something we've seen before in tech, but the AI angle feels uniquely potent right now.
But let's be clear, Atlassian isn't just talking about AI. This pivot, as drastic as it is an acceleration of an existing strategy. They've been integrating AI features for a while now.
Right, they have Atlassian Intelligence, don't they? I've seen some of those features pop up in Jira and Confluence.
Exactly. That's their umbrella brand for AI features embedded directly into their products. Things like summarizing long Confluence pages or Jira ticket threads, helping with writing, answering natural language queries, even generating suggested tasks or fixing JQL errors. Those are already live, usually for premium and enterprise customers.
And then there's Rovo, which sounds like a more advanced version of that.
Yes, Rovo is positioned as a more powerful, cross-functional AI assistant. It works across the entire Atlassian ecosystem and even integrates with third-party tools like Slack and Google Drive. It's built on their teamwork graph and is designed to search, learn, and act. We're talking AI agents to automate complex tasks, enterprise search across all company data, and knowledge cards that surface contextual info.
So they're not just window dressing, they actually have a pretty robust AI offering already. And the report says their AI features surpassed 5 million monthly active users by early 2026. That's significant. So why the drastic cuts now?
Because this isn't just about innovation, it's also a deeply defensive move. The market for productivity and collaboration software is being completely reshaped by AI, and Atlassian's core products, Jira and Confluence, are right in the firing line.
Ah, the competitive pressure. Who are they worried about? Microsoft Copilot, I'm guessing?
Absolutely. Microsoft Copilot is the biggest threat. They're integrating AI across the entire M365 and Azure ecosystem. There's even a Jira plugin for Copilot, allowing users to interact with Jira data inside Microsoft Teams. That's a direct threat to Atlassian's walled garden. And it's not just Microsoft. Slack with Salesforce's Einstein and Notion with Notion AI are all deeply integrating generative AI. It's a workflow race. AI-powered features are quickly becoming table stakes.
So they can't afford to be a laggard. This isn't just about getting ahead, it's about not being left behind. They have to match and ideally exceed what their rivals are doing with AI, or Jira and Confluence become less relevant.
Precisely. Wells Fargo analysts even noted that Atlassian is well-positioned to embed agentic AI into its established workflows, which could be a key advantage. But that requires a heavily AI-focused R&D pipeline. For our listeners, the developers using these tools every day, this means a massive shift in the product roadmap.
So what does that look like for the SDLC? What kind of AI-powered features are we going to see pop up in Jira, Confluence, and Bitbucket?
We're likely talking about automated backlog grooming, where AI agents help product managers prioritize stories, identify dependencies, and even draft user stories. AI-powered code review integrated with Bitbucket, suggesting improvements, catching bugs, summarizing pull requests. Intelligent incident management in Jira Service Management, automatically summarizing details, suggesting root causes, drafting postmortem. And generative knowledge bases in Confluence that can automatically create documentation from code, summarize project progress, and answer complex questions about system architecture.
That sounds pretty powerful, actually, but also potentially disruptive to existing workflows. And if they're so focused on these big AI features, does that mean the more traditional feature requests or just improvements to core usability that developers have been asking for years might get deprioritized?
That's the trade-off, right there. This intense focus on AI may come at the expense of those fundamental improvements. It's a gamble on whether the shiny new AI features will be transformative enough to outweigh any frustration from a stagnant core user experience or long-standing bugs that never get fixed. So we've covered a lot of ground today. What are the big takeaways for our listeners, the actual engineers and product managers living in these tools every day? I think there are a few critical points. First, Atlassian's actions are a prime example of AI washing in action. The imperative to pivot to AI provides cover for significant, often painful corporate restructuring. It lets companies frame cost-cutting as a forward-looking investment, even if it's also about addressing historical overhiring or financial pressures.
So always be skeptical when you hear AI as the primary reason for layoffs.
Exactly. Second, this signals a massive shift in how tech companies value engineering talent. It's no longer just about raw headcount. It's about having engineers with a very specific AI-centric skill set. It indicates a potential devaluing of traditional software development roles in favor of those skilled in machine learning, data science, and AI model integration.
So upskill or be left behind, basically.
That's the implied message. Third, Atlassian is making a multi-$100 million bet here. They're betting that the institutional knowledge and experience of those 1,600 laid-off employees are less valuable than the future potential of a smaller, more AI-focused team. This is a high-stakes gamble on their ability to retool and innovate faster than their competitors.
That's a huge bet, and it'll be fascinating to see if it pays off.
And finally, for the millions of developers who live in Jira and Confluence, this internal earthquake will profoundly affect the product roadmap. It will now be overwhelmingly skewed towards AI-powered features. The central debate for the coming years will be whether this intense focus on AI genuinely enhances or detracts from the core functionality that made these tools indispensable in the first place.
That last point is crucial. Will Atlassian successfully build the next generation of developer tools, or will they alienate their core user base in the process? That's what I'll be watching for. And it makes me wonder, are we going to see a wave of other companies follow Atlassian's lead, making similar AI sacrifices in the name of future innovation? And how much of that will truly be innovation versus just a handy excuse?